Jeynes is Head of Protection at MetLife and well known to many of you in the room. He has held senior roles across the industry over the last 20 years, including Vitality, Underwrite Me, and Reassured. Please welcome to the stage, Mr. Phil Jeynes.
Thanks, Kevin. Good morning, everyone. There we go, it's working. Kev was very pleased with himself there because that's the first time in all of those 20 years he's got my name right. He normally goes Phil Jeynes. So for those of you in the room, it's jeans like the trousers. The one time he did get it right, he then got my job title completely wrong. So this is the first time he's absolutely smashed it. Technically head of individual protection, Kev, but that's nitpicking, it's nitpicking. So a brief introduction to me, for those of you that don't know who I am. As Kev says, I've been in this industry for 20 years. Actually, it's my 30-year anniversary in financial services next year, because I started out as a mortgage broker in the last century. I guess in terms of my expertise in talking about is the UK market disruptable, well, I've worked for some businesses that have seen themselves as disruptors over the years. So my first business-to-business gig in this industry was Direct Life and Pensions, may she rest in peace, where Mike Ward had created the first digital application process. Then I moved to Vitality, or Prue Protect as it was then, which, as we all know, sought to disrupt the market in terms of the way that critical illness cover was paid out and bringing that forward to make it more relevant for more customers. Then I moved on to Underwrite Me, where, again, Martin Worth, another entrepreneur, was setting out to make the first unified set of underwriting rules that meant advisors and customers could have one place to make all their applications. And then stepped on to Reassured, many of whom are in the room, the largest independent broker in the UK, seeking to move from its highly successful telephony model into a digital age. And over all of those years, the protection market remained completely flat, so I failed completely. The extent to which I was part of that disruption, it depends on whether you believe my CV or not, but I've certainly been around a bit of it, so I know a little bit, I guess. So the glib answer to are we disruptable is probably no, based on the evidence. But let's be optimistic and suggest that actually maybe we are. I thought I'd tell you a little bit about, I thought I'd click on, but I'm just going to show you the same slide. Oh, there we go. Yes, so I thought I'd tell you a little bit about MetLife, for those of you in the room that might not know too much about us. So here's a very brief, actually it's not brief at all, it goes back 157 years. Here's a very long timeline, but succinct, that shows the history of MetLife. I won't go through all of it, but just to pick out a few key bits. As the name suggests, Metropolitan Life, a US-based insurer originally, launched back in the 1800s. I think a couple of things that the business are very proud of. We were among the first insurers to support victims of the infamous San Francisco earthquake back in the early part of the 1900s, and in fact sent agents in person to the site to assist survivors of that devastating incident. One of the stats that my MetLife colleagues in the room love, and we use a lot, is that we were the first insurer to pay out a life insurance claim on the Titanic. A lesser-known fact about that is we also declined the first claim from the Titanic because our assessors found that if she'd just moved over, there was room on that door for another person. And for those of you that were at Cover 2 weeks ago, that is the same joke. I was very pleased with it. But that's the only thing that's the same in the presentations, I promise. We launched in the UK in 2007, and I'll talk a little bit more later on about what we do in the UK market and how we try and disrupt here. But yeah, headlines for us: 157 years of operation, more than 45,000 colleagues worldwide operating in 40-plus territories. Kev, Roger, and the organisers here very kindly ask every year for feedback on Protection Review, and I always give positive feedback. One thing I always say is it would be great to hear from people from other sectors and other markets telling us what goes on outside of the UK. So having joined a multinational company, I thought I'd probably better put my money where my mouth is. So I'm going to pick out a couple of examples of what we do outside of the UK, and we can all form our own conclusions as to whether we think there's an analogy to our industry. The first one I'm going to look at is in the Gulf. So the Gulf, as far as MetLife is concerned, is broadly 5 territories, the largest being the United Arab Emirates. It's a large and growing market, albeit a lot less mature than the UK sector. And it's made up, as you probably all know, of some indigenous citizens and a huge number of expat communities as well. The ecosystem in that territory is different to the UK, but there are some similarities. So citizens in the UAE, for example, get very heavily subsidised or in some cases free healthcare, so a little bit like the NHS, whereas expats have to rely on private medical cover. So the big innovation that MetLife has launched in the Gulf area is our 360 Health application. This, as the name suggests, is a completely holistic protection package that can be brandable for our partners, which looks at prevention, so giving information and advice to customers, early access to doctors and physios and so on. Diagnosis, so starting to move into the medical sector around actually scans, tests, early interventions, through to then treatment, insurance, payouts when a serious illness or an incident is detected. So I think this is interesting to me because actually it feels like a bit of a natural evolution from where we've got to in the UK. We still have very much a divide between the private medical and the personal protection sides of our industry, but they are starting to come together. I think, Vitality is quite a good example of somebody that started to try and look at this holistic 360 approach. And most insurers have followed. So almost every insurance policy you buy from people in this room will now have value-added services that start to look at the early part of that circle, the prevention and diagnostics end. I guess where we haven't got to in the UK is that completely joined-up approach where we say, well, we can give you a policy and an application that looks after you wherever you are on this circle. So there's perhaps a read across there to the UK market that this is where we're going to eventually end up. I think what we were all expecting from the budget yesterday was maybe a little bit more disruption around how we fund the NHS, because any of you that have had to use it recently will know it's creaking, to put it mildly. But there's still a perception in the UK, and a lot of the surveys that we do amongst consumers, there's a perception that the state will look after you, and that is obviously driven by the fabulous NHS that we've got here, which provides that safety net for people. And that doesn't exist in other markets, so there's a readiness to engage with these types of products. The second area I wanted to look at was Latin America. So Latin America, obviously another very large market made up of lots of different countries, Brazil, Chile, Mexico being three of the largest ones. And that's an area where MetLife are very, very prevalent. That market is growing. So we talk about the protection gap in the UK. Tick it off your bingo cards, people. That's the first mention today. The gap in some of these emerging markets is much, much bigger. The number of private citizens that self-insure is very small. And so there's huge opportunity, and technology is being used to try and bridge that gap. So in Latin America, we've launched an Accelerate platform, which is aimed at offering embedded insurance to consumers. So whereas in the UK, the model that we've got predominantly looks at, well, where are customers coming to us already? Mortgages, wealth, investment, and so on. What they're doing in Latin America is going to where customers are elsewhere, which is when they're buying other things or performing different activities, and providing embedded insurance that presents the insurance to them at a point where they might need it. And again, that's something we've talked about quite a lot in this industry, and there have been several people stood on this stage over the years talked about how they're going to do that, and it hasn't quite taken off, and I'll touch on that a bit later. But the Accelerator platform is a fully customizable, brandable digital platform that allows partners to use MetLife's expertise and underwriting and application processes to present insurance in a variety of different ways to their customers. Currently, there's about 21 partners across Latin America serving around 5 million customers. So it's pretty successful, and it's a huge area of growth for us. Two examples. I wasn't allowed to use their brands because we'd have to get loads of permission from lots of different people. But anyway, this is a food delivery service, a bit like we've got with Deliveroo or something like that in this country. So hugely popular, customers ordering food online, restaurants delivering that food to them at home. What the use case for Accelerator here is for the couriers that are delivering those meals to consumers. So you've got a huge gig economy of people on bikes, in cars, delivering food out to customers on a daily basis. Their work is quite transient, so they're on and off the clock, depending on when there's spikes in demand. And what the Accelerator platform does is allow those couriers to be protected purely when they're working, when they're at need. And it will protect them for funeral plans, income protection, hospitalization, accident cover, all of those different things. So a real toggle on, toggle off approach to insurance, which is proving incredibly popular. The only barrier to doing that really is technology, because if you offer customers the chance to say, well, do you want to just be insured when you think you're going to need it, like travel insurance, they're going to do it. But it's technology that in the UK is probably the biggest barrier. As Kev said, in other emerging economies, there aren't those legacy systems to worry about, there aren't those barriers. So the accelerator platform is proving extremely popular. I think there could be a use case for this in the UK, and it probably will take a step of innovation between a large insurer and the Deliveroo equivalent in the UK. The second one is a ticketing agent. Now, this is the brand that exists in the UK, so I won't mention it. So a large ticketing agent where customers go to buy their tickets for events, overpriced Oasis gigs, etc. And the embedded insurance option here is to protect those customers so that if they can't fulfill that engagement, that the policy pays out for them. So they will submit a claim to say, I was ill and I couldn't go to the conference because I had COVID, and it will refund them. Kev's not concentrating. So again, definitely a massive read across to the UK. I think the barrier for this one is probably more obvious to those of us that have been in the industry for a while. So again, if you refer back to my CV, there are a few things that aren't mentioned. But I have definitely been part of the culture that sold PPI. I definitely sold a couple of endowments, and I definitely sold a few subprime mortgages. And the problem with all three of those was mis-selling. Not by me, obviously, although I did claim on my own mis-sold endowment policy against an advisor called Phil Jeynes. Separate story. But quite rightly in this country, the regulator is averse to us offering insurance to customers without a full explanation of what that policy is, what the alternatives are, whether they should have it, whether it's appropriate for them is what I'm trying to say. So anything where you're seen to be just smuggling insurance into a purchase journey is going to be subject to a lot of scrutiny. That doesn't exist in other markets where they haven't had those incidents in the past, where there's not that legacy of mistrust. So I think the biggest barrier for us here with this kind of approach is satisfying the consumer and the regulator that they're not going to end up with a product like PPI where actually it's not appropriate and they can't ever claim on it. But a huge opportunity, and it's digital, it's technology that's enabling this innovation in Latin America. So that's just a couple of examples of what MetLife are doing globally, which hopefully give us a little bit of conversation later on. In terms of what we're doing in the UK, so the UK, I think, as I said at the start, when you look across the last 15, 20 plus years, whatever innovation has come in and come out, the market has remained broadly flat. There's not been a large difference in policies in effect over that period. There is a huge, therefore, opportunity. I think what MetLife are doing, which is interesting, is we're looking at where those gaps are starting to bulge and grow out of the size as well. So the traditional look at who should be taking insurance is usually done by who's got a family, who's got a mortgage, who's got investments they need to protect, and that's absolutely sensible. And so the traditional products that exist in the market, term assurance, whole of life, critical illness, income protection, fantastic products, are aimed at those demographics of people. But what we know is there's a huge number of demographics that are growing and emerging, which aren't served particularly well by those legacy products. A good example would be the immigrant community, gig workers that we mentioned, those people that are on-off, self-employed, and low-income and single-parent families. So these are people that absolutely need protection, but they probably need it much sooner than our traditional customer base. These are people for whom a stay in hospital, a short stay in hospital, a fractured leg would have dire consequences on their immediate finances, rather than something that those of us with sick pay and private medical insurance could adapt to and not have a financial impact on. So the MetLife products have been designed to serve those needs, those growing demographics, and in a sense, that's where we're getting most of our growth from. Those of you that haven't seen it, this is the second edition this year of our Everyday Risk Report. This is I'm not just saying this as a MetLife person, because if you look back a year ago, I was on a round table as a as a customer working for Reassured saying what a good report this is. So I'm on record twice now, once being paid to do so. But this is a fantastic piece of research. It's got MetLife data in it, NHS and ONS data in it, which talks about the rise, as I've spoken about, of those hospitalizations, accidents, minor illnesses that really affect those people who are closer to the breadline than the majority. The number of days, hours lost to the UK economy from just not being able to work, the rising incidence of allergies, poisonings, everyday trips and falls that can affect people's income in the very short term. So if you haven't got a copy of this, it's on the website. It's completely free. You can speak to us and get a copy of it, or you can download one yourself. But it's got some great conversation starters. So for those of you that are customer-facing, this is some really interesting stuff to talk to customers about. As I say, in terms of disrupting the market, what we're trying to do is look at where those gaps are growing and try and plug them with some innovative products, not underwritten at point of sale.
Thank you to Phil.